Luis, you're the founder, you're the CEO of Hudson Group Realty Network, the founder of HGRN Capital Incorporated.
Yes.
So, what was the moment early in your career when you decided this is the path for me? This is where I want to be. Was it one thing, or what? Did you build
No,
on
it was a
something?
few things,
How
but
was it?
that's a great question because what happened was in '04, I had a liquor store and a nightclub, right? Oh, from 1999 to 2004, 2006. So in '04, I was with the girl that is now my wife. We've been together 24 years, and I had two businesses, but I was living with my mother. And basically, my wife got pregnant. And so I'm like, hey, I got to make a move. Then
Yeah.
my mom ends up getting divorced kind of at
Oh,
the same time. So then it became, you don't want to leave anyone behind. So I told my mother, listen, I'm the first one in my family to buy real estate and stuff like that. I said, Mom, we should buy a two-family. You can live downstairs. I'll live upstairs. We'll build. I explained the concepts to her, and she was with it. She didn't want to get left behind. But I get denied. I go to the bank that I make all my deposits at, and I get denied. And the
wow.
getting denied is not the worst deal. The part that I didn't like, and I guess the reason I structure my business the way I structure it, is that they didn't even explain me why. Like nobody had a reason. The person who was taking my application wasn't qualified to take the application, is what I know now. So they didn't know. They just said, yeah, you just don't fit the guidelines. And I'm like,
Wow.
what are the guidelines? So my why was too strong, right? My wife gets pregnant. We need space. So I called one of my friends who happens to be in the business. He's not a loan originator. He's in the closing department. And I'm telling, this is '04, '05. I don't know if you remember. Everybody was getting loans. So I was telling my boy, I was like, look, man, I have a 740 FICO. I have, whatever, 50, $60,000. I'm ready to purchase the house. This guy's telling me no. The bank's telling me no. He's like, don't worry about that. He put me in contact with somebody at Countrywide Mortgages, which is now Bank of America. And long story short, we get the house, right? So that was part one. And then part two, later on, that same guy tells me, hey, everybody calls me Omar that knows me for a long time. He says, oh, my boss wants to meet you. And I'm like, at that time, like I said, I had a liquor store and a nightclub. And I'm like, what does he want to meet me for? Like, does he want to do a party? Like, I'm not understanding. So anyway, he goes, no, he wants to meet you. He wants to invest in real estate. Again, for context, Bill, I don't know anybody who's
Okay.
invested. I don't know anybody. So I'm like, that's a very foreign concept for me. So I'm like, okay, send him down. So he comes to meet me. He explains to me what he wants to do, which is he's originally from the Bronx. He's Jewish, and he moved to Long Island, and he wants to he wants to start investing again. He sees a good opportunity in the Bronx for distressed properties. He wants to buy and fix, and again, all these things I'm learning. So I say, okay, so what do you need me for?
Huh.
So he tells me,
Wow.
I need somebody to find properties for me,
Ah,
and because they're not going to talk to me here. Because back in '04 '05, the Bronx was like rubble. It was a very aggressive place. And where my store was, 159 3rd, which if you look it up, it's Fort Apache, very tough area. Again, I didn't know that because I'm from that. So I'm like, okay. So he
yeah.
explains to me basically what a real estate broker is. He says, look, you find a property for me. I agree to buy it. I buy it. I pay you 6% of the sales price. So
Huh.
I start doing math. I'm like, okay, 200,000, 12,000. So the numbers are looking really good to me. So we do a deal. I get paid. We do another deal. I get paid. And then on the third deal, he tells me, hey, why don't you come to my office, pick up your check? Now, going back, dating myself, this is before wires and Zelle and all those things. You had to go pick up your money,
Yeah,
right?
I know
Um,
the feeling. Don't worry.
right.
So,
So you had to physically pick up a check. So I end up going to his office, which is a bank in Syosset, Long Island. And when I get there, I'm at the receptionist area, and she's like, "Who are you here to see?" I'm saying, "I'm here to see this person." She goes, "Oh, he's expecting you. Hold on. I'm gonna let him know you're coming." Again, my first real interaction with corporate America. So she goes, "Go around the back." Da, da, da. She explains to me how to get there. So I go in past her. I make a right. There's this large pit with about 100 people, and these people are all on the phone, and they're screaming on the phone. And I'm like, okay. And I keep walking. On the right, I see this whiteboard, and the whiteboard has these numbers like 150, 275, 350. I paid no mind. I keep walking back to his office. I go to the office. I say, "Hey, how you doing? It's me." He goes, "Hey, nice to see you." He's shining his shoes. I don't know why. I always mention that because I thought it was the weirdest thing to see somebody shine their shoes when you walk into their office. And he's like, listen, I wanted you to come here because I see a lot of potential in you. And he goes, how much do you make at the liquor store? So I was like, I make about 100, something like that. It was a number like that. And that was gross numbers. It was cash, obviously, it was decent money.
Yeah.
He goes, that's good money. He goes, but I have guys here doing that monthly. So then I said, that whiteboard, those numbers, he goes, those are gross numbers for the month per person. So I saw 350. I was like, yo, I could at 350 a month, I could change the whole trajectory of my family, like of everybody. That's what I thought. So anyway, he went a little further. He was like, look, you're college educated, you speak English and Spanish. Like, he's like, I don't know why a lot more people from where you come from do this. And I was like, because we didn't know it existed. So anyway, long story short, I said, how do I start? He said, just come in tomorrow. I hired somebody for the store and the club, and I started my second education. That was September.
Nice.
I gave myself a litmus test, or I gave myself a time domain of 3 months to see if I was good at it.
Yep.
End of the year, I get a W-2 for $108,000 or $120,000 for 3 months. I do the math. I'm like, yeah, this is where I'm going. And I just liquidated my businesses. I sold my partnership in the club, and I liquidated the liquor store, and I just went full into being a loan officer at that time. That's how I got into the business.
Nice. How does alternative lending work today? Now, this is a great start in an amazing career you've had here. Um, so you got involved in commercial lending, and it was very successful. But how did that change as we come into where you are today?
Well, I started as a residential loan officer, so I learned about
Okay.
FHA, VA, conventional. Then the meltdown
Yeah.
of 08 came, and that was definitely an education. So I'm still prodding along, and what happens is, they tend to say you start to grow with your clients, and as I grow my client base, they start looking to buy other things, and a lot of business owners, particularly, don't have the proper documentation for income. Right? They're not W-2 wage earner employees. They
Hmm.
might make $100,000 a month on a bank account, and at $1.2 million a year, but show 40, 50,000 after depreciation, write-offs, and all legitimate things, but they don't show enough income. So me being Spanish also, they kind of gravitated toward me. They're like, hey man, I can't, I was told I can't do this. And maybe speaking to you, maybe going back to my first story of when I was denied, I felt a kinship with them. And I was like, no, we're gonna figure out how you're gonna do this. Let me look at everything,
Yeah.
and then I would then formulate or strategize a plan for them and say, this is how you do this loan for you. And
Yeah.
it all becomes about being creative, right? Being resourceful for what we have, and asking about co-borrowers, asking, kind of digging into your client.
Yeah. 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 Nice. So, yeah, can you get into, for example, the types of deals that investors struggle to fund these days? Yes.
I'm doing a deal right now, estate deal for adults that are heirs to the estate. Mother left them like a very large property in Brooklyn for, like, let's say 5 million, but she had a mortgage on it, right? So the crazy part is all the heirs to the estate want their inheritance, but nobody's taking care of the property during this time,
Yeah.
right? So they're in arrears, right? The mortgage is not being paid, tax is not being paid, nobody's taking care of the property. Where I come in, where with something like that, situation like that, I'll do an asset-based loan. I'll basically pay everything off through the estate, and either it's sometimes the two-pronged approach where we'll stabilize it, we'll pull some equity out, we'll fix it up to make it marketable, and then we'll sell it at full retail. Or sometimes one or two of the estate owners want to buy out the other one, so we structure it that way. So that's a very common scenario in New York City. Very common. Uh,
Okay.
a lot of people, they inherit these things, and they don't understand the value, but they don't understand that there's an obligation, right? There's an obligation to take care of property, and even if you're not the owner at the time, you have to take care of it. The bills have to be paid. So that's been a big thing in my industry lately.
Nice, nice. Yeah, right. So, what did your early lessons? You started doing retail. You had a cell phone shop starting off with that. What did it really teach you about the hard knocks in entrepreneurship here? Um, you know, those are
Entrepreneurship,
important stories that all businessmen have to face.
entrepreneurship is really about fulfilling a need, right? You have
Mm,
to know what the clients need and fulfill it. And that you can become creative. Going back to the liquor store, for example, I was on 159 and Third in the Bronx, right? If you look it up, across the street from me is the 42 precinct. So what I did is before social media, and this is a very long time ago, so nobody's getting in trouble. Everybody's retired. But sometimes I had a back room, and I would have some satellite TV first came out, and cigars were a big thing. So I'd have a back room, like almost like a speakeasy, and a lot of the officers after or before work were there, right? They just needed a place to hang out. So that they needed a place to be themselves because now when they go to work, they have to be an officer, right? But they needed a place to be themselves.
yeah.
They usually, for whatever reason, police officers don't live in the precincts that they service. So they're an
Mm,
hour away from wherever they live. So they needed a decompression area.
yeah.
I provided that, right? So I provided that, like, just to give you an example of more revenue. Of course, security was great for me, right? I was always full of cops, but they needed a space to feel at ease because once they
Yeah.
walked in their uniform and they were out there, it was, it was go. It was, and then, like I said, in 04, 05, it was very, very different. It was very dangerous on the streets.
Yeah. 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 Mhm. Have you always really focused on opportunity in your life? A lot of people think of business and they see problems, obstacles, that sort of thing. And did you learn through your career to see things as opportunities?
Well,
How did that come for
that's a practice, right? That's something that not just being in business, but just being a good human.
you? Hmm.
You have
Hmm.
to, it's your mindset. You have to see the good in everything or how it's working for you. And even if it's a bad thing, you have to look for where there's growth, right? Because if you don't do it that way, it's very easy to slip into depression. It's very easy to slip into being
Yeah.
stagnant. Like, oh, what does it matter? Like it does matter. Every day matters because using myself as an example, right? I went to NYU. I come from very humble beginnings, but there might be a kid that's struggling. That's like, hey, I don't want to be a lawyer or a doctor. The safe, even though that's not
Yeah.
safe anymore. The safe occupations at the time. I want to do something else, but I'm not good enough to go to the MLB or the NBA. Like, what can I do? So these stories become about that, about letting them know that, you can fit in different places, and there's using my story as an example. I didn't know about this industry. So it found me and I made the most of it.
Right. Right. Yeah. So you founded Hudson Group Realty Network to provide brokerage and financing services here. What market, what gap in the market were you trying to solve when you started this? And has that changed?
The gap in the market I was trying to, oh, no, it's like I said, you grow with your clients, right? So I've sold multi-million dollar houses. I've sold $200,000 condos. But the biggest thing is that I wanted to service the client. And it becomes that because sometimes I've been in transactions as a lender where realtors are very pushy and it might not be for the client, it might be for the commission. So we don't approach it that way. We approach it with what's best for the client always. And whether or
Mhm.
not, I've walked away from deals that would have made me a lot of money, but they were gonna like hurt my client because I explained about affordability and sustainability, things like that. Whereas especially during the heyday, especially minorities were getting pushed into loans that they shouldn't have been taking. But
Mm.
I'm not gatekeeping, but just trying to help in whatever way, shape, or form I
Yeah,
can.
yeah, yeah. So you specialize in alternative lending products through HGRN Capital Incorporated.
Yeah.
So for investors who may not be familiar with these options, what are the key types of loans you offer here?
A big one is fix and flip. When you find a property that is below market and you want to fix it and then resell it or rent it, we offer hard money for that, where they will give you 90% of the purchase price, 100% of rehab costs. That's one of our products. A bigger product also is our DSCR loans. A lot of people are trying to buy investment properties in different states. And
Hmm.
then, you know, there's Fannie and Freddie have so many rules, right? You can only have a certain amount of properties. Your DTI has to be this. So I take all that out of the loop, and all we go off of is basically the rents that are projected off that property, the equity in the property, and your FICO score, and that's it. So those are my
Nice.
main two. Then we have, you know, hard money asset-based lending, which is if you need money in like 10 days or less, the interest rate is high, but as long as the deal has equity and the deal makes sense, we'll do the loan.
Hmm. Hmm. And you do no doc loans as well, which
Yes. I mean,
the DSCR.
most of my loans are not income based. Most of my loans are asset based,
Hmm.
basically based off the building, not so much your personal.
Yeah. Would you agree that speed and flexibility wins the deals?
Time kills
Or how
deals.
would you say
So
that?
no, time
Okay.
kills deals. The more it's standing there, the more things can go wrong. I just had a conversation with a friend of mine, or a client. He's like, "Hey, where are we?" I was like, "We're nowhere. You haven't sent me the documentation I need." He's like, "But we still look good." I said, "We look good today." I was like, "Things change, right? Like everything, the market changes, the investor appetite changes." I was like, you know, he has a borderline credit score, so I was like, I would rush to get it closed, because if something happens and your credit gets dinged and you're no longer credit worthy, then I can't help you. And he's coming down from a very high interest rate to almost half. So his cash flow is going to
Yep.
almost double. He was in a tough position. He's a business owner, so he has to, you know, his credit is used for his business, so that's why his credit is always up and down.
Mm-hmm. So you mentioned also deals closing in as little as 2 days. So
Yeah.
what has to happen behind the scenes to make a closing that fast possible? And that 2 days, I've not
The
heard of
fastest
that
the
before.
fastest deal I would close was one business day, right? And the reason that we closed
Okay.
is that we had the title report already. We had the title report on the buyer and the seller. The seller was not pulling the trigger. No, I'm sorry. The buyer was not pulling the trigger, but we already had an appraisal. We already had a title report, and my seller was buying something else. So what we did was we just inverted
Ah,
the loan. He refinanced his own investment property to buy another property, and then the buyer came back and then bought it. So all the background work had been done already.
yeah, yeah. Okay. Well, what kinds of deals are traditional banks turning down these days that alternative lenders can solve, such as yourself?
Listen, a lot of you know, we're talking about mid-level companies, right? And when I mean mid-level, I mean pharmacies. I mean businesses you wouldn't even think of that make a lot of money cash flow wise, but their yearly taxes don't reflect it. Meanwhile, they want to buy the asset that their business is
Hmm.
in, and they can't qualify SBA. They don't have the 3 years. They don't have this. They don't have that. Or you know whatever. So I come in and I go off their bank statements. We do what basically a P&L. We
Yeah.
back up some expenses. But if the guy's making $1 million a month, why can't he pay a $25,000 mortgage? He's paying $30,000 in rent, but you're not factoring that because his tax return doesn't say that. That doesn't make sense to me. But hey, it's my opportunity. I'm good. I'll make the money. I'll do the deal. So it's
Yeah.
things
Yeah.
like that. It's common sense things. Common sense to me, maybe not to the layman,
Mm.
the regular person.
Oh, yeah. Yeah. So, Omar, your real estate investing philosophy here. You're an investor yourself.
Yes.
How does being an investor change the way you structure loans for clients? Say you're doing this for yourself,
Well, I like to
and
know, right?
yeah.
So I like to hear what you're looking to do. So if you say, "Oh, Omar, I just want to make the most amount of money in 12 months or whatever," so you're a flip guy, which is fine. If you're making a lot of money in one industry, right? Just say you're a big time W-2 earner. I'm just going to make that up. You're a doctor. I've had clients like
Yeah.
you're a
Yeah.
doctor. You make $1 million a year W-2. You're getting just devastated on taxes. Well, maybe buying a multifamily with the depreciation to shield your taxes would be
Hmm.
a benefit because you don't really need the money from the building. You just need a way to shield your taxes,
Yeah.
right? So it becomes that conversation. Where are you? What are you looking to do? And let me give you strategy. And that's the big difference between myself and let's say other realtors that, I have 21 unit, 50 unit buildings. I've devised a strategy for myself and I can share what I've done, what the good and the bad is. And you can decide whether this is the road you want to take.
Okay, okay. So you're operating primarily in New York, New Jersey, and also Connecticut too. So
New York,
what
New
trends are
Jersey,
shaping
Connecticut,
the
Massachusetts.
investment market?
I'm
Okay.
sorry.
What's shaping the investment market right now in these areas?
A lot of people are scared of New York because you have to have big money, and also with the landlord tenant laws are pretty pro tenant. A
Hmm.
lot of people are taking their money and investing in either Connecticut and different pockets of Connecticut or Massachusetts.
Okay.
They're more friendlier there. You get more bang for your buck. The per square footage is different, and yeah, we're definitely going to have to find some sort of solution with the laws when it comes to landlord tenancy because we have a housing issue in New York City with a lot of uninhabitable units because of the rent stabilization. Landlords are not fixing units because they're never going to recoup their investment of fixing the unit. So the government's going to have to come up with something kind of creative where they maybe give grants to fix the unit. I don't know. I mean, that's
Yeah.
I'm not a
Hmm.
policymaker, but they're going to have to make it make sense for landlords to fix these units, and that's what's been kind of being kicked back and forth a lot in New York City. Now I'm talking about
Hmm.
largest tenements. Now, the luxury market is going to be the luxury market wherever you go. The starter homes are going to be starter homes wherever you go. So that's always going to be moving and shaking. During COVID, during all these things, there are certain markets that were not disturbed
Hmm.
at all. Things were people were moving as if business as
Yep.
usual, right? So I'm talking about the larger scale multifamilies. But one to fours and luxury market, all that's always business as usual, basically.
Okay. So what about the urban redevelopment situation here? What's the market looking for that in the New York City and surrounding area?
They just changed it before we had what's called a tax. They had some tax laws where you would get a 10-year, 15-year abatement. They stopped doing
Hmm.
that. That's being reintroduced, and also now New York just came up with a higher best use zoning variance law, where if you come and you say, "Oh, I have this piece of land, but if I develop it this way, da, 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 it'll be best for more rentals," they're going to give you the go ahead. They're going to allow it. Before there was very strict zoning laws, and they wouldn't allow you to overgrow any or overpopulate any area. But now they're going to have to look at it a little different.
Hmm. Hmm. And how's multifamily demand doing in the whole region?
They always want it. They always want it. One, two, three, four. Because people want it. Like that's usually their first stepping
The
stone,
demand
right?
for multifamily?
Yeah.
Yeah,
They
yeah.
definitely want to buy a three family, maybe live in one, rent out two, kind of get used to that. Then maybe go to a two, and but they call it house hacking
Yeah.
in this state, and then they'll get to their one when they feel comfortable enough, responsible enough, or maybe secure enough that they can handle mortgage on their own, and there's no issues.
Cool. All right. All right. So, Omar, you host the Real with Omar podcast.
Yes.
What motivated you to start creating media around real estate deals?
Representation. To be
Yeah.
quite honest, representation. Having people speaking about things that I want to hear about. And I know it sounds
Mhm.
very, very almost self-centered, but it's not because there's a lot of people like me. They want to hear about tax law, policy, stuff like that. And you can't go to just, and I say this carefully. Most of the podcasts that I was watching or looking at, I'm like, yo, this is ridiculous. I don't want to watch this. This has nothing to do with me. This is not, I'm trying to do something. I'd love to get information from people that have done it. And that's hard to do. Like to get access to people that have done things that you're looking to do, it's tough, especially in New York City. Everybody's kind of guarded. So I started
Mhm.
the podcast to give people a place to, speak intelligently about things that are be interesting, whether it be business, whether it be self-development, whether it be even health.
Mhm.
There's so many different things. And
Mhm.
I've gotten some traction, man. I'm like 108 episodes in, and
Nice.
yeah,
Nice.
it's a work in progress. It's a labor of love.
All right. All right. How important is education for investors today? I mean, yeah, is it all
Education,
on the job or?
education, education is everything. And I'm
Yeah.
glad you asked that question because people think, oh well, he said, or she said, that's cool. You can take advice, but you should always check your sources, right? And that becomes the part where it seems more like it's work than just fun. And that's where people kind of drift off. right? Well, if he said it, it must be
Mhm.
good. And you know what the biggest thing is going to be with AI now? Everybody's taking AI at face value, but you still have to verify certain things. AI is just data, and it doesn't know if the data is accurate sometimes, right? So that's
Yeah.
showing up more and more in conversations lately with me because I'm like, no, that's wrong. He's like, yeah. I'm like, no, no, go look again.
Mhm.
And he's like, oh shit, you're right. I'm like, so education, but active education, not just spitting or googling or AI searching. Like you have to dig a little bit. You
Yeah.
God forbid you go to the library once in a while, right?
Yeah. I know. So you're involved with the National Association of Hispanic Real Estate Professionals through the
Yes,
Bronx
I
chapter,
founded the Bronx chapter in 2017.
and you founded that.
Yeah.
Excellent. So, I mean, what role does financial education play in expanding home ownership opportunities here?
Well, most people think it's too far away, right? They're like, oh, not me, or they want to, but they don't know where to start. And the biggest thing that I see, especially in my culture, is they're embarrassed. They're embarrassed to talk about their money. Like people are embarrassed about talking about income. And I'm like, yo, this is where we start. This is where we learn kind of where we're at. This is our baseline. I want you to understand what $300,000 a month in a payment looks like. And I speak from the Latin culture, especially. Like, there's so much embarrassment when it comes to stuff like that. And I'm like, there's nothing to be embarrassed about. It's just like talking about anything.
Yeah. Okay. Okay. So looking ahead 5 years now, how do you see commercial lending evolving? If you had your crystal ball here, looking out that far ahead, where's commercial lending at that point? And where's your
Well,
company at this point? Until
commercial lending is becoming more and more creative.
Mhm.
So it's becoming more and more of a tapped into resource. My
Mhm.
company
Mhm.
I mean, this is a whole different podcast. My company with AI is going to look very different. It'll be, let's say, it doesn't have to be heavy human, meaning with 10 people, we'll probably do what 100 people can do. And, I don't say that because I don't want to hire. I say that because efficiency is everything, right? And you want to pour into people that want to excel. And unfortunately, in my experience, that I will push you, but I won't drag you, if you understand that.
Mhm.
And especially I've had hires where the younger generation, they look at things differently, and we got to figure out. Well, I got to figure out a way to communicate with them better, because I understand you want to fulfill your purpose, but you also have to pay your bills. So you have to fulfill your purpose once you've actually established yourself in some sort of way, shape, or form. I think
Mhm.
that got lost somewhere. Again, it's not a shot at the younger generation. I just think that they have to
Mhm.
understand that, yeah, you get to earn that. You get to earn pursuing your
Mhm.
passion once you've established yourself, or you have a little bit of credibility in a professional sense.
Right. Right. What about the next 3 to 5 years with alternative lending growth, the DSCR, the other alternatives to the
The
institutions?
pools
Where do
of
you see
capital
that?
are available, and what I see this year, I called it last year. I'm looking for that clip so I can republish it. There's going to be a mass consolidation, as you see it in real estate right now. There's a lot of
Hmm.
consolidation
Hmm.
because honestly, the old houses they don't generate revenue, right? The agent generates the revenue, and that because information and personal branding, going back to my media, personal branding became so prevalent that you don't need a Douglas Elliman. I'm not saying their name because I don't like them, or you don't need a Compass to be successful. You can do it on your own. Now that's also happening in the mortgage space. Like you used to have bigger banks, and now you have all these smaller banks, and some banks you don't even know about, right? Because their direct consumer is so smart and so strong. They don't have to be super big. So again, survival of the fittest, which is okay. Consolidation over competition. I mean, if you have certain pieces that work well together, it's great. But at the end of the day, the strong will survive. I believe that, and I'm totally okay when it's my time to go to pasture. I'm cool. I'm like, I'm gonna keep going. I'm gonna keep going until somebody takes me out.
I don't see that for many decades here, man.
I hope
But
not either,
anyways,
but it should
yeah,
be that way. Like that is what brings
yeah,
out the best, I believe. Anyway.
yeah. Okay, cool. What about technology and underwriting here? That moving ahead, the computers and the different technologies, the AI. is out there. How is that going to change underwriting, data collection?
The
Where
crazy
do you
part
see
about
that?
the crazy part about underwriting, because underwriting, going back to residential, right? When I learned how to underwrite DU and LP, which is desktop underwriting and loan prospect, that's Freddie Mac and Fannie Mae's. I learned how to do it. I was certified in doing that. What I realized is
Mhm,
that it's a program. It only works off the data you put into it, and
mhm,
you're only putting in a 2 year window of your life, so you can really prep for this test, right? And
mhm.
that's a nugget for everybody out there. Like, you can really prep for this test for 2 years, get what you have to
Yeah.
get, and then kind of settle down. I had a conversation with some clients that came in last week. They were like, "I really want to buy this house." I said, "Well, work all the overtime you can. No, it's time to go and work as hard as you can, so you can because they weren't liquid as liquid as they wanted to be." I said, "You can pull out your 401k, but you're gonna have to work like you've never worked before. It's go time. You have to go.
Mm,
You have a goal. You want to achieve the goal. This is part of the work." And like I kind of feel
mhm.
like I coach some of my clients because they don't know where to start. They're like, "Does it matter?" I'm like, "Of course it matters."
Right, right, right. What, just to wrap it up here, Omar, what advice would you give a young person starting out on this journey who has that drive for real estate? What do they need to do here?
They have to put themselves in a position to be successful. And what I mean by that is that the internet is cool. Being in your house and in your room is cool, but you have to get out there. There is a art to person one-on-one per communication, and in real estate and lending, it is the super sauce, the super ingredient. It's relationship building with people. You have to
Mm,
know your numbers, and you have to be good with people. You can do one in the room by yourself. The second part, you got to get out and practice. Like anything you want to do, you have to practice. You have to do it every day. And
mhm,
that's the
mhm.
part where I see the younger generation is not. They're not interfacing with other humans that well and finding out what might motivate them or what their true questions are, what their fears are. You get that through sitting with people and understanding and exchanging energy.
Mm, mm. Excellent, excellent. Yeah. So, Omar, what stands out here? Your incredible journey in entrepreneurship, combining lending, education, outreach through your podcast. This has been excellent here.